Starting the webinar. Welcome back, everyone, to FX Street. Very glad you could join us today. It is 6 a.m. Eastern. It's Thursday, February 11th, 2010. My name is Adam Rosen. Very happy that you could join us today. Very special thanks to FX Street. We have a very fun topic to talk about today. We're going to try to discover the best way to find the best currency pair to trade. Now, this will change from time to time, and of course, this does vary according to our trading style, whether we're a short-term trader like a scalper or a day trader, swing trader, the medium-term outlook, or a long-term position trader. Now, this obviously does change depending on our strategy. However, there's a very simple set of rules and tasks that we can go through to determine what is the best currency pair to trade. Now, assuming that most of us are probably more focused towards a short-term day trading type of strategy, we can take that into consideration. Now, you should see in front of you, and if you don't see the charts, please let me know. I'll be more than happy to refresh the system. However, you should see in front of your dollar daily chart. We're going to work with daily charts today. And the indicator at the bottom is the RSI. It's a relative strength index. Measures the relative strength of each currency pair, each financial market on a scale of 0 to 100. Indications above 70 are considered to be very strong. Indications below 30 are considered to be very weak. The typical reversal signals that we look for in the RSI is when the line crosses below and back above 30. At that point, we'd want to look to buy, or to sell short when the RSI line crosses above and back below 70. I always use the standard settings, by the way, 14 periods going back on the relative strength index. However, the RSI, the relative strength index, can also be used in a different fashion to gauge actually the strength of that specific currency pair. And we can run through a little exercise, shouldn't take long, to help determine which currency pair is the best to trade. So what we're going to do is we're going to take a look at a couple different charts, a number of different charts actually. We're going to look at the current indication of the RSI. I'm going to jot them down in the chat window just to keep track. And this is going to help us deduce what is the best currency pair to trade. So if you'd like to follow me on your own chart as well, we're looking at all daily chart, and we're going to look at the RSI relative strength index. Now, the most recent indication for the euro-dollar RSI currently is 33.98. We'll round it up to 34. So I'm going to chat these in just to keep track of them. Of course, I'll be more than happy to repeat any indications if you're missing them. So the RSI on the euro-dollar is 34. Now, again, typically traders will use the RSI when it crosses back above 30 to buy or crosses back below 70 to sell. However, we're not going to look in that particular way. We just want to know what the RSI is right now. So the euro dollar right now indicates an indication RSI of 34. The pound dollar currently indicates an RSI indication of around 31. Pound dollar, 31. We're going to go through a number of charts, and it's going to begin to make some sense, I promise. Looking at the Aussie dollar, there was some news in Australia today. Aussie dollar currently indicates 49. Going to look at the Kiwi dollar. The indication for the Kiwi dollar is 44.64. We'll round up to 45. So Kiwi dollar 45. We'll take a look at some other crosses such as the dollar Swissy. Now the dollar Swissy is we see the dollar is in the inverse position as the euro dollar, the pound dollar. And the euro dollar and the pound dollar pairs, the dollar is the second currency within the pair. What we're trying to find out is the relative strength of each currency against the dollar, just as the mainstay, so to speak. So we want to take the inverse number of the dollar crosses where the dollar is the first position. So the dollar Swissy, the RSI is 64. The inverse of 64 is 36. Dollar Swissy. Does everybody understand how that works? Because the dollar is in the first position in the dollar Swissy. The dollar is in the second position in the euro dollar. So I want to take the inverse just to keep everything on the same sheet of music, so to speak. The dollar CAD, the RSI currently indicates 49.59. We'll round to 50. That's easy. Either way we call it. We'll call dollar CAD 50 on the RSI. The dollar yen, we see an RSI indication of 45, so we'll call that 55. Dollar yen indicates 55. Now, so far, again, we see a euro dollar indication of 34, the pound dollar 31, the Aussie dollar 49, the Kiwi dollar 45. We take the inverse numbers of the dollar, Swissy, CAD, and yen crosses. So the inverse number would be 36. 50 and 55. Look for the highest and lowest levels. Now the lowest level, first of all, on any one of the RSIs that we've covered so far is the pound dollar. That's 31. Now that shows us that against the dollar, it's an equal comparison. It's an even comparison, so to speak. If we compare the euro and the pound and the Aussie and the Kiwi, the Swissy, the CAD and the yen, the 6 other currencies against the US dollar, we see that the pound dollar, the RSI indicating 31, the pound is the weakest. That shows us if we take away the common denominator, which is the US dollar, it shows us the British pound is the weakest currency among the entire list against the US dollar. Does that make sense so far? I think it's very important that just to go through the dollar crosses and to find out the general RSI indication. So the pound dollar again, RSI indicates 31, and you take away the common denominator, the US dollar, and it shows us that the British pound is the weakest currency against the dollar if we compare all of them. Now, let's try to find the strongest. We take a look at the euro dollar, the pound dollar, etc., and we see on the Aussie dollar. Well, it's a great question, Jess. How do you calculate the inverse? Because we're trying to calculate the relative strength of each individual currency against the US dollar, we want to compare each currency against the US dollar on an equal basis. Well, if we take a look at the euro dollar, the US dollar, again, is in the second position. The euro is in the first and the dollar is in the second. So that shows us RSI of 34. If we take a look at the dollar Swissy, and a lot of times you'll see the euro dollar and the dollar Swissy are almost exactly opposite in their charts because the euro and the Swissy move in very similar manners. So when we want to compare the euro dollar against the dollar Swissy, well, the euro dollar is the dollar second in its position, meaning the euro first, dollar second. And the dollar Swissy, the dollar comes first. So it's not a fair comparison to say the euro dollar is, 34, the dollar Swissy would be 64 at that point. So all I want to do is take the inverse of the dollar Swissy. Remember, the dollar Swissy was 64 RSI, but we just want to flip it. So essentially, you take the dollar Swissy, the reading was 64, subtract that from 100, scale 0 to 100. So 100 minus the dollar Swissy. Here, we'll go back to the dollar Swissy chart for a moment. 100 minus the dollar Swissy, so to speak, which is 64. 100 minus 64, 36. Just take that number if the dollar's in the first position. Most of the time it's not. And subtract that from 100. So 100 minus 64 equals 36. Just to keep everything on a level playing field. Does that make sense? Just take, if the dollar's in the first position, subtract it from 100. That's all. Okay. Very, very simple. Now, again, the pound dollar has the lowest RSI on the equal comparison. That's 31. That tells us the pound is the weakest. Let's actually write that down. Pound is weakest. And if we want to use 4-hour charts, that's fine. 5-minute charts, that's fine as well. Just keep everything on an equal basis. In this case, I chose daily charts because I really want to try to find out what is the overall trend. Now, for day traders, we can certainly use this to our advantage as well. Now, let's try to find the strongest. The euro dollar was 34, pound dollar 31, Aussie dollar was 49, Kiwi dollar was 45, the dollar Swiss was 36, the dollar CAD was 50, the dollar yen was 55. So we see against the dollar, where the dollar is the strongest against the yen, meaning that the yen, or I should say the opposite way. The yen is the strongest against the dollar. The pound being the weakest because the pound dollar RSI is 31. The dollar yen is the strongest at 55. Remember, we said it was actually 45, but we have to subtract 45 from 100. That gives us a reading of 55. So we're not really talking about dollar yen. We're talking about yen dollar if you flip the currency pair. Well, at any rate, that tells us that the yen is the strongest. So if we put the two together, we would find that the pound yen, the pound being the weakest, the yen being the strongest, put those two together, pound yen has the strongest trend to the downside. But let's go on. Let's take a look at some of the yen crosses and see if we can deduce a little bit more information. You should see right now a euro yen, and we'll go through the same exercise again. The euro yen currently is 35, just to see if we can find any more information. Euro yen equals, what did I say? It was 35 for the euro yen. Okay, 35 euro yen. The pound yen, remember, so far we think that's the weakest. The pound yen gives us an indication of 35. Pound yen equals 35. Again, we're just looking at the RSI daily charts, equal comparison between the two. Taking a look at the Aussie yen, the current Aussie yen RSI indicates a 47. Aussie yen, 47. We take a look at the Kiwi yen. The Kiwi yen is 43. Kiwi yen equals 43. And finally, take a look at the CAD yen. And the CAD yen is 47. CAD yen, 47. Now, we can go on. We can look at the pound Swissy and the euro pound and the euro Swissy, the euro CAD, etc. All the other more exotic, less commonly traded currency pairs. If you do so, I think that you're going to find a lot more information and maybe you'll find a little bit more hidden secrets in the foreign exchange market. But I think that even if you were just to go through this exercise with the dollar crosses alone or with the yen crosses alone, I think that's enough because that covers really the brunt of the foreign exchange market. Sure, we may look at the euro kiwi and that may give us a really weak or very, very strong RSI indication. But I think if you take a look at the dollar crosses or the yen crosses, then that certainly is enough. However, I would say if you're going to take a look at only the dollar crosses, meaning only euro dollar, pound dollar, Aussie dollar, Kiwi dollar, dollar Swissy, CAD, always include the dollar yen because we always want to see what the dollar looks like against the yen. Don't disregard it. Sometimes we tend to forget about the dollar yen because oftentimes the dollar and the yen move in similar fashion. However, certain fundamental data, like PIC data that we just saw yesterday, that really tends to move the dollar yen sometimes. Anyway, let's take a look at the yen crosses and see if we can find any more information. Euro yen indication 35, pound yen also 35, the Aussie yen, the CAD yen 47, and the Kiwi yen is 43. Well, the weakest indication you have out of all of the currency pairs is still the pound dollar 31. The euro yen, the pound yen with 35. That's not weaker though. The strongest indication we still have is the dollar yen at 55. Now granted, the Aussie yen was 47 and the CAD yen was 47, but dollar yen still was strong. Or actually the yen dollar, if we were to flip it, so to speak. So the yen crosses, after analyzing that, really didn't show anything new. That's okay though, because we just want to do our homework and try to figure out what's the strongest, what's the weakest. What does all this information tell us? All this information tells us, again, weakest currency is the British pound, strongest currency is the yen, and then we know that over the past 14 periods, the pound yen is the weakest currency on a daily chart basis. The dollar yen, if I did my math correctly here, the dollar yen, it's a great question, Boinky, is the indication right now is 45. So we already did, I flipped in my head, I'm sorry if I didn't mention it. The dollar yen RSI is 45. But because we want to make everything, keep everything on an equal playing field, equal comparison, so to speak, we would take 100, subtract 45 away, and that gave us dollar yen 55. So, and I'll type it in. Because the dollar yen, dollar JPY, there we go, equals 45, that actually indicates that the yen dollar would equal 55. I apologize. I already flipped in my head, so to speak. So that most traders use a dollar yen, most trading platforms use a dollar yen. So just flip it, just to keep everything on the same sheet of music, so to speak. Question is, so at what level do you consider strength and weakness? Well, the RSI indicator, it's a great question. The RSI indicator is a really, really great tool because it's simple. It just, in terms of this exercise, it just simply shows us over the past 14 periods how strong, I should say, or how weak is that specific currency pair. Now, if we were to use the RSI to actually look for trade signals, we want to buy when it crosses back above 30, sell when it crosses back below 70. But in this case, all we want to do in order to determine, to answer your question, I hope I am, strength and weakness is just to find out what is the strongest, what is the weakest. You know, it's on a more simple level. You remember the old days a couple of years ago when the dollar was going down, 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 and the market was very, very trendy. Well, when the market was very trendy and the dollar was going down hundreds of pips almost every single day, it was very, I don't want to use the word easy, but it was a lot easier. It was a lot more simple to make money. When the dollar goes down, we buy euro dollar or pound dollar or Aussie dollar, Kiwi dollar, and almost everything makes money because the dollar was going down at such a rapid rate that everything else went up against the dollar. If we read the news earlier today, the unemployment numbers in Australia were much better than expected. The Aussie shot through the roof. If we would have bought the Aussie against almost, I would venture to say anything, that currency pair would have gone up. Aussie yen went up. Aussie Kiwi, I didn't look at the chart recently. I'm guessing it probably went up. Aussie dollar went up. Just about everything Aussie CAD went up. Everything went up against the Aussie because the Aussie was very directional. Most of the time, I used to remember the statistic. Most of the time, the market is not trendy like that, though. I think I remember hearing a statistic a while ago that 60, 70% of the time, the market doesn't really have a strong trend. I'm sure you'll notice that. Trend meaning when the market breaks to a new high or breaks to a new low, most of the time it doesn't happen. The market only really breaks to new highs or new lows for a very small amount of time, maybe 20, 30% of the time. So most of the time, it's not so easy to find that trend. Most of the time, we're not going to see the Aussie go up against everything or the dollar go down against everything. And that's why I like to run through this exercise, because most of the time it's not so apparent. And even if the dollar is going down, after all, if I'm going to sell short the dollar, I want to buy the best currency against the dollar. If the euro dollar is going to go up 150 pips and the pound dollar will go up 200 pips, I would rather buy the pound dollar. In this case, going through our exercise, we can see the pound dollar. I hope I answered your question, Charlotte. Please let me know if I didn't. But going through our exercise, we can see that the pound dollar, the RSI, has the weakest RSI, 31. Against the dollar, well, against any currency pair, really, the yen dollar, which is the inverse of the dollar yen, has an indication of 55. So if we divide out the common denominator, so to speak, we find that the British pound, out of the entire universe of currency that we follow, the 8 major currencies, the pound is the weakest, the yen is the strongest, and that put those two together, and that's really what we want to do. That's what they call the perfect storm of foreign exchange trading. That's what we want to do. Buy the strongest currency, sell short the weakest. Let's go to the pound yen, assuming that is in fact. And again, the RSI, if you're wondering under what scale, under what criteria does this tell us that the pound yen is the weakest currency, the RSI, I always use again the standard settings, goes back 14 periods. On a daily chart, we could count that 14 candlesticks. And we can manually do so as well. We see the pound dollar at 139.77 right now. Count back 14 candlesticks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We'll take the highest high, going back 14 periods. The pound yen was at a high of 147.21, currently 139.76. Roughly, that's what, 700 something pips. Over the past 14 candlesticks, the pound yen has gone down 700 plus pips. Now, let's take a currency pair that really has a benign or relatively flat RSI, such as the dollar CAD. But dollar CAD right now is 105.97, and we're going to subtract the highest high from the lowest low, give the foreign exchange market the benefit of the doubt. The dollar CAD right now, 105.96, count back 14 candlesticks. So let's zoom in so it's a little bit easier to see. Please let me know if you don't see the dollar CAD chart, by the way. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Well, let's take the highest high going back 14 candlesticks was 106.88 on the dollar CAD. By the way, the dollar CAD RSI was almost exactly 50. That's why I picked it, because it has literally no trend at 50, right in the middle. So the highest high was 106.88. Right now we're at 105.94. The difference is what, 88 plus 5, that's another 93 pips. So if over the past 14 candlesticks, while the pound yen has moved 700 pips, the dollar CAD has moved less than 100, 93 pips. In other words, if we had been right to sell short the dollar CAD, and if we had bought the dollar CAD, we actually would have lost the money. That's why I say sell short. Let's give ourselves, the benefit of the doubt. If we were right and sold short the dollar CAD 14 candlesticks ago, we would have made 93 pips. And over the same period of time, if we had sold short the pound yen, we would have made 700. Well, obviously the pound yen, that represents a better trade. Well, from that point moving forward, how can we use this information to our advantage? Well, we're day traders or we're short-term traders. Now, if we're long-term traders, that's a different case. I would like to look at the longer-term trades and, look at the longer-term charts, I should say, support, resistance, fundamental data, a little bit more involved. But short-term traders, well, the first thing we would say the trend is your friend. Okay. The trend is your friend. The strongest trend is cable yen to the downside. And we know that we want to trade in the same direction of the trend, and that is certainly to the downside. Well, that means we only want to look for areas to sell short. Let's roll back the clock and say, well, I wish I would have known this was the case. Let's pretend that we did. So we go to a shorter term chart. We go to, let's see what would work well. Let's say a 4-hour chart on the cable yen. On the cable yen 4-hour chart, we want to look for a day trading strategy. So I want to throw in another indicator, something very simple. No pun intended. We'll look for a simple moving average. How do we use the simple moving average in the trending market condition? Well, I just threw in a simple moving average. It happens to be a 60-period moving average. Just out of coincidence, it happens to look pretty good. But we're going to look for a 65. I'll tell you why. There we go. Okay. In a trending market condition, we only want to look to trade in the same direction as the trend. So going back over time, if we would have known that the cable yen was a weak trending currency pair, and I knew at that time that I wanted to look to sell short, I want to sell short as close as possible to the moving average. Well, how do I know which moving average to use? You see the high that occurs up at 147.21. It's on a 4-hour chart. This goes back to January 28th. The high again was 147.21. I want to find a moving average that comes as close as possible to that high without the moving average being too far away, so the high that candlestick doesn't touch the moving average, and not too short of a moving average where the candlestick goes above. Now this is a 65-period moving average. Now different moving averages can be used at different times. Let's try to use a 95 moving average. Well, we see if we use a 95 moving average, it's too long of a moving average because the candlestick doesn't touch the moving average. It factors in 95 candlesticks. That's not enough time. Let's say we didn't know 65 was a good number. Let's use 35. Well, 35 is too short because 35, we see the market intersected and actually crossed above the moving average. What we want to do is try to find that perfect moving average where the market touches it but doesn't go above. Well, we know it's a 65. Just out of luck, I happen to get 65. That worked well. Well, if that moving average worked well in the past, I want to trust that moving average for one more trade moving forward. Days from now and weeks from now, will that moving average still continue to be the right moving average? Maybe, but I would say probably not. I think this is a technique that you can use. 4-hour charts, I really, really like to use this technique. I think it's a good compromise between long-term trends and short-term pullbacks. So what I want to do is look to sell shorts, trend is your friend, the next time the market tests and fails to break above this moving average. Well, we knew that this moving average was good at 147.21, highs of January 28th. Then the market went down. Well, that was on January 28th. February 3rd, the market went up again. Now the moving average told us to sell short, to look to sell short. The moving average indicates 145.59. The high of the market was 145.25. Only about 20, 30 pips difference. Not too bad for a 4-hour chart, which tends to still factor in quite a bit of trading volatility. We would want to look to sell short when the market looks like it's going to come up as close as possible, hopefully touch that moving average, but not go above it, and then show its reversal signs back to the downside. At that point, we would want to look to sell shorts with the anticipation of going down. You keep your protective stops above the moving average and take profits. Well, taking profits, you have to do it with a little bit of discretion. There are other tools you can use. I'll show you one in a moment, but that is the basic technique. Is this 65 simple moving average still appropriate? It currently tells us to sell short at 142.43 or at 139.78. I would say no. after that one test, especially if it didn't come up exactly as we expected it to, I want to readjust the moving average again so it comes down and touches the last significant high. So if this is a 65 moving average, go down to a 60, and that does the job. So the 60 moving average now shows us the market going down a little bit at a faster clip, and that shows us at the moment we want to sell short near 142.24. If the market continues lower and doesn't give us a chance, I'll have to readjust the moving average again. Or you ask the question, is your strength meter calculated this way? Well, the strength meter, I like to use daily charts and use the RSI. But that is simply done. We just simply go through that exercise to find the weakest or the strongest, or I should say, better said, the most trendy currency pair. The currency pair where has the strongest currency against the weakest currency. Now, once we know that, and now we do know the cable yen is that currency pair at least for the time being. At that point moving forward, if we're a short-term trader, then I'm going to move to short-term charts. I'm not going to use the RSI anymore. The RSI, I think, has done its job. The RSI has told us the cable yen is the most trendy currency pair. In other words, the RSI is the currency pair with the most amount of trend, the most amount of direction in it. The currency pair with the least amount of direction is the dollar CAD, because that RSI was 50, right in the middle of the RSI scale 0 to 100. Now, we can use the dollar CAD for a different type of strategy, but not trending. We want to use it for a range-bound strategy if we expect the dollar CAD not to really go anywhere. I'll show you that in a minute. In fact, let's throw on the Bollinger Bands indicator just to show you one other technique that can be used. And the Bollinger Bands, again, like all indicators, I like to use the standard setting. I'm going to take away the moving average, by the way. And as I take away the moving average, I'll also answer the question. Is the simple moving average better than an exponential moving average? What's the difference? A simple moving average measures each candlestick with an equal amount of weighting. So if we look at a 10-period moving average on a daily chart, it takes the last 10 days, the closing prices of those 10 days, adds them all up and divides by 10. An exponential moving average is a little different. It gives the most recent date, meaning yesterday or today, a little bit more weighting. So what does that change in the chart? You'll see the exponential moving average will start to move and react to today's market a little bit faster than the simple moving average. Simple moving average, again, divide 10 periods divided by 10. Exponential moving average also divides it by 10, but then gives the most recent candlestick a little bit more strength, a little bit more weighting in the calculation. If you'd like to know the exact calculation, go on Google. There's a lot of really good sites that explain exactly how it works. To answer your question, though, I use simple moving averages mostly out of habit. There's absolutely nothing wrong with an exponential moving average. I don't think you're going to see a great amount of difference. In fact, I'll take away this for a moment, and I'll show you exactly what the difference is. Throw in indicator, and this is really the best way to learn, just to play around with the charts. Throw in the moving average. We're going to use a 20 simple moving average, and then throw in another indicator. We're going to use a 20 exponential. Where's my moving average? There we go. A 20 exponential moving average. It's also smooth and linear weighted, just different calculations, so to speak. Let's change the color so it's easier to see. The purple line we can see is the simple moving average. The yellow line is the exponential moving average. On a 4-hour chart, the cable yen, the simple moving average shows us 140.05. The exponential shows us 140.32. Only about 7 pips difference between the two. And we can see as the market goes down, see how the yellow line, the exponential moving average, goes down a little bit faster than the simple moving average. That's really different. I use simple moving averages out of habit just to keep everything on the same sheet of music, so to speak. Either or is perfectly fine, though. So the weakest currency pair translates to the most trendy pair. It's the weak. Well, you are correct, but not necessarily weakest. It could be the strongest. Now, why did we select the cable yen? Because it had the RSI, the combined RSI that was the furthest away from 30. The furthest away from 50. I'm looking for an indication from 30 or 70, 20 or 80. Now, if that showed us the cable yen was 70, I would still take the cable yen. It would be the strongest currency pair. In fact, if you take the cable yen and you flip it over, it would be the yen cable. And instead of the indication of 30 or whatever it may be, 35 maybe, then we would flip it around and we would see it would be 65. Now, but to answer your question, you are correct. It shows us, just to be completely specific, it shows us the most trendy currency pair, or in other words, the currency pair with the greatest amount of direction, meaning it's moving somewhere. The dollar CAD has the least amount of trend, the least amount of direction, because it's at 50. So it means that as much as the dollar goes up, the CAD goes up. And as much as the dollar goes down, the CAD goes down. That's the difference. So you are correct. It shows us the trendiest currency pair. Now, let's stay with the cable yen because we know that is the trendiest currency pair. Throw in a different indicator. We're going to look at the Bollinger Bands. Always use the standard settings, 20 periods, 2 standard deviations. The center line in the Bollinger Bands is the 20 simple moving average. That's what everybody uses. The lines above and below the simple moving average is that moving average, 2 standard deviations above and below the simple moving average. And that simply tells us that the market statistically, 2 standard deviations out, has the greatest probability to stay between the upper and lower lines. In fact, if you do the math, the market statistically, 2 standard deviations above and below the simple moving average, will only go above the upper band and will only go below the lower band about 2.5% of the time respectively. Well, if I were to tell you, well, 2.5% of the time, the market will only go above the upper band 2.5% of the time. That 97 point, actually it's not 97, but 95% of the time, the market's in between the 2 bands. Well, I want to short if the market's above the upper band because that doesn't happen very often. And I want to buy below the lower band, 2.5% above, 2.5% below, 95% in the middle. That's 2 standard deviations. That's what we want to do. Now, again, the trend is your friend, and in the trending currency pair, remember cable yen, according to our relative strength exercise, that tells us cable yen is definitely going down. I only want to look to sell short. It's true, we could buy at the bottoms and catch reversals. It's tempting, but I want to try to find, with my limited amount of capital, and it really is precious, the trading capital that I have in our accounts, the highest probability trade. In the same respect, if I went to Las Vegas, sure, there are games that we could play, such as the slot machines, which, by the way, has the lowest probability of making money in Las Vegas. Anybody know the highest probability game in Las Vegas? I think it's blackjack. I only want to play those games that gives me the highest probability of success. In the case of a trendy currency pair, it's trending with the trend. In the cable yen, it's to the downside. I want to sell short. There's 2 spots to sell shorts with the Bollinger Band indicator. Some will sell short at the center moving average. Some will wait for a test of the upper Bollinger Band. Well, if we had sold short of the upper band, we would have had the chance. Remember 147.21, the high, January 28th? That was one chance. Then again, it gave us another chance going to February 3rd, those highs of 145.27, and even one more chance more recently. In fact, that was yesterday. That gave us a cable yen trade of 140.140. We're currently 139.78. Not too bad for one day. That's about 160, 170 pip move to the downside. Where do you take profits? To answer your question, take profits at the center moving average. Why not take profits at the lower Bollinger Band? I don't know necessarily if it's going to get there. We see so far the market has not touched the lower Bollinger Band. I want to take profits where the market's most likely to go to. That's the center, the simple moving average. The question is, and does the strongest pair also translate to the most trendy? Absolutely yes. Now, if we traded, it's a great question, and you're absolutely correct. If all of us didn't trade the cable yen, if we traded yen cable, then the yen cable currency pair, remember, take the inverse. If cable yen is 35, then yen cable would be 65, right? 100 minus 35 is 65. If we knew the cable yen, if we didn't know the cable yen, if we knew the yen cable currency pair, then I would still select the yen cable currency pair, and I would be telling everyone to look for buy signals because that is the most trendy currency pair, And the direction happens to be the up sign. See, this little exercise measures two things. It first measures the strength of the trend. How far away are we from 50? In fact, I'll type that in. Strength of the trend, and that means how far away from 50. And number two, it tells us direction. Direction we always have to honor. The trend is your friend, and we want to try to find that RSI indication the furthest away from 50. 50 means no trend at all. Anything away from 50, the trend starts to get stronger. Why is the trend stronger? Because over the past 14 periods on a daily chart, while the yen has gone up, the pound has gone down. The yen has gone up the most as the pound has gone down the most. That's what we want to look for. That is a trending currency pair. Now, furthermore, just to go back for a moment, if we were to sell short the cable yen near the upper Bollinger Band, that's an educated trade. I really like that trade. Now, again, we have the chance again. The upper Bollinger Band is near 141.22. We're right now 139.88. We're right in the center, so I don't want to do anything. However, if I did sell short, if I had done this exercise and I sold short the last time we saw the upper band tested, that was at 141.20, I'd want to take profits right now. Close the trade. We're right in the middle. So it's a 20 simple moving average. It's the average of the market over the past 20 periods. It represents the price that the market has the highest probability to come back to. Take the safe trades. Take the best probability trades. I always find myself getting in trouble when I say to myself, wow, I made 50 pips, but wouldn't it be nice to make 100? Or if I made 100, but the chart says maybe I can make 200. It's easier to make 20 than 50. It's easier to make 50 than 100. Make the easy money first. After we're all millionaires, then we can start complicating things. So, question is, right now, would you continue to short cable yen? Absolutely yes, but not at this price. We're right in the middle. Right now, we're right in the middle, no trade. I want to wait for the market to run up to the upper band, test the upper band, fail to break above the upper band, fail to close above the upper band, and then I'd want to look to sell short like this, and I'll zoom in here so everyone can see. I hope everyone can see this chart. You see this long candlestick wick up at 140, 140? That was a high, well, February 10th. It's a 4-hour chart. I do not simply, and you may wonder, well, why can't I just place an entry order up at the upper band? Right now, the upper band is 140, 122. Is it possible I can just log on my trading account, place a sell limit order to sell short at 140, 122, and walk away from the computer? You can't. We could have in the past, and in the past, you would have been right. But this candlestick that went up to 140, 140, 20 pips above the upper band, I didn't know, and none of us knew that it was going to reverse back to the downside. This very well could have gone up, broken through, and started to reverse back to the upside. There's always the risk of a reversal. So I want to try to, again, improve my probability. Wait for the market to test the band or come very close to it, and to wait for signs of a reversal. Wait for signs of reversal, maybe on a slower or a shorter term chart. I'm going to draw a vertical line. I'll show you what I mean. We drew a vertical line over here on a 4-hour chart at that moment, the last official place where we would have wanted to sell short. Now we go to a 1-hour chart. Here's that upper band. Here's that line, so to speak. Now the 4-hour chart counts 4 candlesticks of a 1-hour chart. This is a 1-hour chart now. Now this line, we actually have to drag it forward. This 1-hour candlestick represents, it's the same 4-hour candlestick. It just measures 4 candlesticks. So we want to try to find a candlestick that actually tested that upper band. At this point, when we see the market goes up, 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 and we test the upper band, but wait, I don't want to sell a short. Let's wait for the market to turn back to the downside. Now, a 1-hour chart might not have given us a signal, so we would have had to go to even shorter-term chart, let's say a 15-minute chart. Let me just adjust this for a moment, and I see questions, so I promise I'll get to them as well. Zoom in. Okay, here's a 15-minute chart. Again, this vertical line represents, remember that 4-hour candlestick hit the upper band. Market goes up, up, up. Well, that's strong. I don't want to sell short. I never sell green candlesticks because green candlesticks have a funny way of turning into more green candlesticks. However, I know that this level approximately 140, 120, that remember the 4-hour chart that did represent, here's a 4-hour chart again. The 4-hour chart, the upper Bollinger Band was 140-120. Write that down on a piece of paper. That's the approximate area I want to look for reversal signals. Then you go to a 15-minute chart, look for those reversal signals. Where's my line? On a 15-minute chart, then you look for the signs of the actual reversal. There we go. See the signs of reversal? We went up, and then green candlesticks turned to red. Long candlestick wick above the upper band. Well, that told us maybe the trend is starting to change. Long candlestick wicks sometimes tell us that the reversal is pending. And then we start to see negative candlesticks. I want to try to sell short as close as possible to that 140, 120 level. It's always a compromise. If I sell high, I'm going to get a better price with less confirmation. If I wait for a lot of confirmation, I'm not going to get as good of a price. So, unfortunately, the best thing I can say is use your own judgment. Some traders will use this rule. I want to wait for the candlestick to close or at least come back down below the upper band. Some traders will use a sell stop order. So we say, well, we went up. I'm not going to sell short unless we go back down. It goes right back through my sell stop entry order, so to speak. It's a little bit, of a judgment call at that point. The question is it not better to do the inverse, take pairs that are near 50, so there's a potential move because if it's away from 15 means that it's already moved. It's a great question, Bobby. It's a great question. In other words, the cable yen, which our little relative strength exercise has already told us, hey, the cable yen's already down. Maybe we're closer to reversal. That very well can be the case. If we were talking about the stock market, I would really, really agree with you. However, foreign exchange, these trends last for a long, long time. In my experience, trading stocks and trading foreign exchange, stock market is a lot more fickle. Stocks tend to reverse all the time. Foreign exchange trends tend to continue for some time. Plus, on top of that, we're trading foreign exchange market. We're trading 50 to 1, 100 to 1, sometimes even 400 to 1 leverage. We don't need a very big move in order to make some money. After all, go back to the 4-hour chart on the cable yen. Let's say we were lucky enough to sell short at 140, 120, taking the profits, the simple moving average is 140 even. That's 120 pips. What's 120 pips? That's what's 120 pips? It's nothing. It's $1. It's absolutely nothing. It's $1.20, so to speak. Would we trade a stock? We say, okay, we made $1, let's get out. No, we trade stocks. The most leverage you can get is 2 to 1. Professional traders sometimes 4 to 1. So if we make $1 in the stock, it really doesn't do a lot for our trading account. You make 120 pips. That's a nice trade for the day. So between the leverage, the increased leverage, and the longer trend that tend to develop in the foreign exchange market, I like to stay with the trend. Now, it's a great question because remember, go back to the daily chart. Really great question. Remember, those reversal signals, and I'll tell you that you might be right in the cable yen at this point. I forgot. Take a look at the RSI. It crossed below and back above 30. I would say at this point, if the daily chart says that or shows us that the RSI crosses below and back above 30, that is the reversal signal we're looking for. So until the point that the RSI crosses below 30, we can sell short. Well, the RSI never really got to 70 going back to January 3rd. However, from January 3rd, coming down to when did we cross back above 30? That was February 8th. That is over 1 month. There's over 1 month of potential sell signals. Well, the market was kind of choppy in the beginning, but then the cable yen moved from levels of 149 down to, well, we're at 139. We hit lows of 138.23. Hey, in 1 month, the cable yen went down 1,000 pips. 1,000 pips. That's a lot of really juicy short-term trades that we can find. Do we flip when we're 50? No, always trade with the same direction as the trend. When we see the market come down, or I should say, if you see the RSI at 50, then there's a different trading strategy. I have about 60 seconds left. I want to show you really quickly what that is. Remember the dollar CAD? RSI was at 50. That tells us the least amount of trend. We don't know if it's going up. We don't know if it's going down. Over the past 14 candlesticks, dollar CAD's really not accomplished anything to the upside or downside. Well, I'm going to do two things. Throw in your Bollinger Bands and go to a shorter term chart. Does a 4-hour chart do it for us? 4-hour chart, we could use a 1-hour chart. Sometimes 1-hour charts work better, sometimes 4-hour charts. Let's use a 1-hour chart. Okay. Now, dollar CAD, it's a completely different trading strategy because the RSI on a daily chart says 50. It's the least amount of trend. Has the least amount of probability to go up or go down. It's really not doing anything. The dollar CAD, for better words, is asleep. Well, again, remember Bollinger Bands on a 1-hour chart, any time frame, we only see the market go below the lower band 2.5% of the time, above the upper band 2.5% of the time, 95% of the time we're right in the middle. Plus, you factor in that the daily chart RSI, which is 50, tells us that we really don't expect the dollar CAD to do anything spectacular. We have the greatest probability not to see the dollar CAD go up or down. Well, the dollar CAD over the past 24 hours or so finally broke to new lows. But before that occurred, take a look at all the range-bound trades we could have taken. Buy near the lower band. Some traders will wait for the market to cross below and then back above the lower band. Sell short near the upper band. Some traders wait for us to cross above and back below. It's up to you. Again, you wait for more confirmation. You might not get as good of a price. But if you don't need that kind of confirmation and you want to get a better price, you're taking a little bit of a lower probability trade. It's a judgment call. Buy at the lower band, sell short at the upper band, take profits at the simple moving average. True, we could buy at the lower band, sell at the upper band. You have the potential to probably make more money, but there's a lower probability of doing so. So I prefer to take the high probability trades, the safer trades. Question: what is the maximum of indicators that can a newbie use to trade? It's a great question, and I would say the fewest possible. I don't like to use more than one indicator for the same purpose. In other words, if we're going to trade on a daily chart, here I'll go back to a daily chart dollar CAD. Would I use the Bollinger Bands and the RSI and maybe a moving average altogether? Absolutely not. Remember, we use the RSI for one specific purpose. Just use the RSI to identify the strongest trending currency pair. In this case, the cable yen. That may change. Now, once we know that, I can take the RSI off my screen. It's done its job. Now that we know the dollar CAD, according to our relative strength little game, now that we know the dollar CAD is the least trendy currency pair, and that tells me how to trade range-bound strategies, then I can go to a 4-hour chart, or like we did in the past with a 1-hour chart. I know buy low, sell high. That's what I'm going to do. The RSI told us that the cable yen was the most trendy currency pair, and that tells us the direction also. That's down. The trend is your friend. Only look for short trades. Well, then I also want to look at a 1-hour chart or a 4-hour chart as we did in the past. Well, there's a cable yen. Here's a 4-hour chart. I want to look for the trend. I want to look for those short trades. Those short trades occur at the simple moving average or in some cases, at the upper Bollinger Band. So to answer your question, one indicator per use. The RSI in this case just identifies the best currency pair to trade, title of our webinar today. And then we can use the moving average, or I really like use the Bollinger Band to try to find those trades. Range bound, buy low, sell high. Trending market, the trend is your friend. What is your settings on a Bollinger Bands? I always use the standard settings that all chart packages use. 20 periods, 2 standard deviations. Some traders like to vary a little bit, but I like the standard settings because I like to see the indications that everybody else sees. I want to see what everybody else is looking at. Try to anticipate maybe what the market will do. Also, it's a little bit of laziness as well. With that said, I am exactly out of time. However, if you have any questions, please do not hesitate to contact me directly, www.forexlounge.com. And I encourage you every day when you wake up, throw in the charts, go through the exercise. It didn't take us more than 10 to 15 minutes. Identify the strongest, weakest currency pair according to the RSI daily chart, and then you have your game plan moving forward for the rest of the day. I, by the way, use simple moving average. I always use simple moving average. Again, contact me if you have any questions. I thank you all very much for joining us. I wish you all a great day, all profitable trades, and we look forward to